Welcome to Daily Conversation. This is Mr. K.
This is Eric.
Yeah, today is 23rd of April 2021 and the time now is 6:16 a.m. Well, today our topic is sharing about investing with copy trading. Will it become a trend? If it will, what is the effect? How we adjust our investment strategies for it. So before we get started, please click the like button and subscribe to our YouTube channel. Alright, so here we go. Yeah, so today we talk about copy trading. Yeah, and then before these conversations, I try clicking into the my eToro apps,
Mm,
and then there is a function which we can copy people, right?
mm,
Yeah, and then I found that for those we call them the master, which we can follow. Um, yeah, the return is yeah is really high for either long-term investor and shorter-term investor.
mm,
Yep. So so for here, I think this will be something. I'm not sure this, but I think this will be something that many people will choose to do because for people who don't know how to invest, uh, we may not be able to earn uh, such a high return even for people who know how to invest, right?
mm,
Yep. And then yeah, and then I tried to click in and found that it seems like for eToro platform, if you want to copy trade somebody, and then yeah, the minimum amount is quite high. Uh, I couldn't try it on my apps, but I tried to search from the internet. They say uh, they need a minimum of 2,000 US dollar so that
mm,
you can start your copy trading. Yeah, so I think firstly this is that there is a minimum amount. Yep. Uh, yeah, so this is the first things to consider, and then I also found that uh, they can choose more than one people to copy. I mean, they can have, let's say, five a person. They can
mm,
copy five person at the same time and make it like a portfolio.
mm,
Yeah, they can also choose uh, the industry to choose to copy based on industry. And of course, they can also choose to copy on individual, which this
mm,
individual may invest more than one industries. Yeah, so for copy trade, yeah, I think it is it is a good good thing to consider to
mm,
me. Yep. And then will it become a trend? This I think this uh, already is a trend since so many platforms enable us to copy trade. And one thing I also found on the internet say that some other platform they actually have a charge, uh, which is the fee you have to pay if you want to copy another person. But for eToro, it seems like there is no additional fee. Yep. So I think for this, it will again encourage people to copy other people.
mm.
Yep. So this is my opinion for the first part of this topic, and then yeah, the next part of the topic is, if it will, what is the effect? Yeah, for here, I think if many of the people choose to copy others, and because if they choose copy, it means that uh, whenever the price hit the stop loss, then uh, they will all sell the stock at that price. It means that uh, there are more uh, same investment. Yeah, because let's
Mm,
say A is the master, and then he has, let's say, 1 million followers. So it means that all of these 1 million add up together will become the same uh, investment. So for this, I think it will cause it may cause the stock price to become uh, more volatile. Uh, I'm not sure. Yeah. So yeah. So I think this could be one of the effect. And then um, yeah. Actually, I'm not sure what other effects it can cause to. Yep. So yeah, I stop here first. And uh, how about you, Eric? What do you think?
yeah. Yeah. It will make the stock price more volatile, just like you say.
Oh,
Mm.
yep. Yeah, yeah, and then for the last part of the question, how we adjust our investment strategies for it. Um, for this one, I'm not sure what what strategies we can have. Are you referring that we may choose to become one of the follower?
It
Uh,
could be one of the strategic,
mm,
but uh, you need to think from the game theory perspective.
oh,
If if all other people doing this,
mm,
then what should I do? What thing I can do?
mm,
Mm.
yeah, and then one thing I'm quite curious, and I couldn't get an answer in such a short time. And what I would like to check is what is the benefit for people who let other people to copy their trading? Will
Yeah,
they get any something like uh, a, s- a salary or commission for that?
yeah, they can get even the even even on the eToro platform,
Mm,
the the trader who allow other people copy their trade
yeah.
also will get a commission
Oh, it is from the platform, or from what from the money that they made from the
from
investment.
from the from a platform. So
Mm,
if there are many people copy their trade,
yeah.
they will earn additional commission.
Oh.
And yeah, and you can try to think where the commission come from, right?
Um.
Because
Yeah.
this is something like eToro is something like just a stock exchange platform.
Mm,
Mm.
yeah.
How can they generate uh,
Profit.
I mean uh or should I say
Mm,
why they want to do this? Yeah, and how can they finance these expenses from elsewhere?
mm, yeah.
Mm,
Uh, yeah, to me, I think most of the revenues or profit that they get is from the spread
mm,
for uh every trade that we make.
mm,
Yeah, so for here, so many people do investment every day, so it will they will have uh uh quite many quite much revenues, isn't it?
mm. Yeah, so it could be one of the reason eToro allow you to copy other people trade. Because it can increase the trade volume in
Mm,
overall, so they
yeah.
can earn more money, and then they share some money uh to the trader.
Mm,
Mm.
yes.
And how about maybe there's another reason you copy other people trade
Yeah.
and you will buy at a higher price. Mm.
Mm,
Then maybe there is additional spread which is earned by eToro,
mm,
so you suffer some loss.
yeah. For this one, I have checked from the internet. They say there is no additional spread. Uh, yeah, but I need to do further research to confirm this.
Mm.
Mm, yeah.
Yeah. So
Mm,
uh yeah. So for the first reason, yeah, they do this because they want to attract more volume. Does it make sense to you?
yes. Yeah.
Mm. Yeah. Because
Mm,
this market is too competitive. We
mm,
got so many platforms.
yeah.
Mm.
Yep. Yeah. So actually, I have finished my sharings. You
Oh
may
yeah.
start
So
yours. Mm.
yeah, I miss uh what's your response to the last question?
Last
How
question.
we yeah
How we
how can
adjust, yeah, our investment strategies for it.
mm,
For this one, I think um, because for investment, it is uh, necessary for us to know what we invest. I mean, uh, along the investment path, we actually trying to learn more, and then so for this um, choosing to copy others is a choice, but we also need to choose who to copy, and we also need to know what they are investing. Uh, yeah, so this is also something that we need to know before choosing these strategies, and it is not like we can choose, let's say uh, the trader that give highest return, and then without knowing what they are doing, and also without doing without knowing the the stock that they are investing. So we still need to um, something like do our homework, do our research. Yeah. So um, like you said just now, to think of the from the aspect of game theory. Um, um, currently, I have no ideas on on this part.
mm. Yeah. So okay, then for that part, what will
Mm.
you start to think? What is the first question in your mind?
Uh,
Are you is it because uh you don't have idea for that is because you haven't start to ask some critical questions, or you really don't know where to start.
Uh, I don't know where to. Um um yes, I don't know where to start, and I also uh yeah, I just couldn't link the game theory to this topic.
Yeah. So what is game theory?
Game theory is something like um what what other people do, and how it affects another people. So
Mm.
it's like their strategy.
It's like
Uh,
playing a chess.
yeah, yeah. To me, it's
Yeah.
like it's similar to that.
Yeah. You need to predict other people. You need to predict the next moves of other people. Maybe
Mm,
you not only need to predict their next moves, and also you need to guess what's their intention to make these moves. Yeah.
yeah,
So you are guessing the next and the second next and the third next. So you
yeah,
actually are predicting more than one moves of other
mm,
people. And
yeah,
then you try to understand what they are doing and why they are doing this. So you adjust your strategy to uh you adjust your strategy uh to fit yourself into that situation so that
mm,
you can gain an overall better position.
mm,
Mm. So is it so hard to start to think? For example,
yeah,
if this is a trend, yeah, and everyone using, or we say most of people like, because most of the people they don't they don't really want to spend their time to study. They just want to uh
get the
copy other
return.
people
Yeah,
copy other people's homework. Mm, yeah, so that if you share your homework, they will appreciate it and just copy.
yeah,
Mm. So this is so this is the nature of copy trading. You don't really need to know, yeah, what they invest. Maybe you just check their his, historic result, yeah, historical result, and
mm,
then if you think if you think it's okay to copy, then you copy.
yeah,
Yeah. So if they copy, so that mean uh okay, if the trader, for example, if the trader trade buy Apple, Facebook, Amazon, let's say let's say they buy this company, and
mm,
then many people copy their trade. Yeah, and then what is the impact to the stock price? Mm, yeah,
yeah, yeah. That will increase, right?
yeah, because many people copy,
Mm,
mm, and many people buy the same stock. So that means copy trading will lead to more people buying the same stock.
mm,
Yeah, so this is the starting point. Mm,
yeah.
yeah. So what will be the next?
Um, for some of the stock, maybe uh, they are not performing so well, or maybe they cannot get enough return. Um, uh, will be affected, which less people choose to buy those stocks.
Okay. So do you mean those stocks were undervalued?
Um, uh, yeah, it could be.
Mm.
Yeah.
Uh, but the trader, have their philosophy, have their investment philosophy. They want to earn money from that. So, if one stock is overvalued, yeah, this is not just because they want to earn a living from this social trading. They also care their trading profit. They also care their investment profit because they
Mm.
are skin in the game. Yeah, if they didn't sell earlier, they will lose money. So that and also one more reason they want to earn more money. So if let's say the stock price is quote unquote overvalued, and then they found
Mm.
another stock which the stock price is not performing well, but the company is good, and then what would they do? They'll buy they'll sell the quote unquote overvalued stock and then buy the quote unquote undervalued stock, right?
Yeah.
Yeah. So when they do this, and then other people will copy their trade.
Mm. Yeah. So you means that they are not staying on just uh uh the same stock. They will uh jump from a stock to another stock from time to time.
Yeah. Why they want to stay on one stock?
Mm. Yeah. True.
Hmm. And then what is the impact for that?
Um. Yeah. I think for this it is about the volatility uh
Hmm.
that we mentioned earlier.
Yeah. So this uh you say you didn't start to think, but you actually get the conclusion. So I'm not sure how do you get your conclusion if you are not following this thinking this thinking way of thinking process.
Yeah, actually, because recently, the price of the Bitcoins keep dropping, and then uh, I think that one of the reason that they drop is you also tell me a bit yesterday. It's like because uh, many people set the stop loss at a particular point. So when it reach that point, and then it will trigger another uh, uh, selling of stocks, right? So
Mm,
if
mm,
because we have so many copy trading, so maybe uh, the 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 stop loss at a point actually is a stop loss for many people, for many traders.
mm,
Yeah,
yeah.
so it makes the price so volatile.
Mm, yeah. So yeah, then what will you do since this is the uh uh since this is a consequence, and then how would you adjust your investment strategy for it?
Um, okay. It is volatile. Yeah, but if we invest in longer term, this volatility can be accepted, right?
Hmm. Yeah, this could also be one of the strategy. Yeah, which is do nothing. Do nothing is also one of the strategy. Yeah, so you get your answer. So is there any other answer? Yeah, and also, are you think you are stick to the long term investment? Look at the number of trade you have done. Me, maybe you are not long term investor.
Yeah, I'm not long term. Yeah, a lot. Many of the stocks in my portfolio I plan to sell if I got enough profit.
Hmm. Yeah. So uh maybe you can think. Yeah. What you are doing. So you try to look at your behavior,
Mm.
and then try to understand why you would do this, and then also you will also try to ask, yeah, in this volatile market, what is the correct method? So what is the better way to do a trade or do investment? Yeah, you also can ask you also can ask yourself this kind of question. There is no
Mm.
correct answer. Yeah, and then by thinking this, uh, it yeah, it will help you. Yeah, it will improve your investment performance. Yeah, and this is not other people things. This is the thing for yourself. You help yourself. Yeah.
Mm.
Mm. And this is related to money. So it's worth for thinking. Yeah. So
Yep.
this is the reason why I don't wish to give you like the standard answer, because the answer need to find by you, find by yourself.
Mm.
Mm. And for me, uh, investing with copy trading, okay, I wouldn't use copy trading. And I always done my own research. Mm.
Mm.
And then would it become a trend? It's already a trend. Yeah. And don't look at this copy trading function on those stock exchange platform. Yeah. You just look at the YouTube. You just look at the internet.
Yeah.
Many YouTuber, many guys share the stock. Yeah, share the stock they own. So this is also a copy trading, because they share their stock, and then other people will know this. Yeah, and then they'll do some study. Yeah, or maybe they just directly buy it.
Mm.
Yeah. So this is also one of the copy trading form.
Yeah.
It doesn't require us to activate the function on the stock exchange platform, and there's no
Mm.
minimum amount that restricts us to do that. And we
Yeah.
also can copy from many people. Yeah.
Yeah.
Mm. And also, uh, why why it will become a trend? Because actually, I mean, what's the causation? So what's the cause? What's the root cause for this? It's actually the uh we are in we are in the era of information, and now the information is quite is really efficient. Yeah.
Mm.
So for example, we have one theory which is like the EMH, like efficient market hypothesis. Yeah. But I
Okay.
don't believe we are in the perfectly efficient market. Yeah, this is
Oh.
not the case, but
Yeah.
the efficient have increased over time. Mm. But the volatility also increased. Mm. So perhaps this this two is the contrary concept. Yeah, because at the same time the information become more efficient.
Mm.
Yeah, the market become more efficient, but why the stock price becomes so volatile? Mm. If everyone have the same piece of information,
Yeah.
yeah, why they choose to uh buy the stock at the same at the same price, and then sell uh no not buy at the stock for the same price. Yeah, they keep buying the stock. Yeah, and push the price high.
Mm.
And then until the last person uh who join the ship. Mm. And then the stock price start to fall. And then it also cause many people want to sell their stock. Yeah. So the stock price will rise a lot, and then it will also drop a lot.
Mm.
Mm. So if everyone own the same piece of information, they
Yeah.
know the value of this company, it it should not be happen. If everyone really know the valuation, the real valuation, or we say the intrinsic value of this stock, yeah, it shouldn't happen.
Yep.
So there must be something wrong in here. Then it
Um,
will cause these
mm,
two ideas uh, in conflict.
mm.
Yeah. Why? What you want to say?
Um, yeah, the case that maybe many of us can get the information, and uh even in the case that many of us get the same piece of information, but it doesn't mean that we all respond uh the same to the information, right?
Can you explain in detail?
Um, okay, let's say if a person like you who already had done the research in Bitcoin, and then so you have the knowledge about Bitcoins, and for another guys who are the let's say the beginner or actually outsider of Bitcoins, and then now today there is a piece of information um which is the latest information which you and that guy receive at the same time, and uh, 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 you and that guy will not necessarily have the same response, right?
Uh, yeah, but I mean, yeah, because I'm talking about the copy trading. I'm talking about many people follow other people and buying the stock or buying the ticker. Yeah, so
Mm.
uh, the if you want to say, yeah, we have different response to to that piece of information, and uh, what what would they do? Would they buy? Would they sell? Would they hold? And what would I do? So the action only had only actually only had two. Yeah, only had two. One is stay in the market.
Mm.
Another is exist the market. Yeah, and maybe you have the third one. So put more money into the market.
Yeah.
Mm. So that uh I don't get you means. So what you mean is like we respond differently uh to the same piece of information.
um yeah, I think that is because uh I'm not I'm not very sure about the concept of just now you mentioned those efficient market. Is it efficient market hypothesis?
Yeah. Okay. I'm talking about the market is become efficient. It's become more efficient. So that means
Everybody has the latest information at the same time.
it could be it could be one of the evidence. Okay. And another is nowadays this is not this is unlike 5 years ago, 10 years ago. You can't really find a stock. You can't really find a company which is undervalued and the stock price is very very low. That means and the performance is very very good. You
Mm.
can't really find a stock which is undervalued.
Yeah.
This is what I'm trying to say.
Oh, okay.
Mm,
Yeah.
yeah. So not necessary to the latest information.
Mm.
Yeah. For example, uh, maybe you not understand. Yeah. What destiny? What's the business of destiny? And then on YouTube there are many YouTubers share about destiny. Yeah.
Mm.
So why they buy in the stock? Yeah. Why is the business? And then yeah, there are many. Yeah. so that you understand more about the business. They
Yeah.
do their research, and then they share you their thoughts. Then you just copy. So that means the general understanding to a particular stock have increased. This is what I'm trying to say.
Yeah.
Yeah. Uh, but since many people have the general knowledge, and then they buy the same stock, and then they own the same piece of information.
Yeah.
But but the market still so volatile. And why? Yeah, why? It's because this is this is this is the answer. This is the answer to uh, why these two concepts incomplete. Yeah.
Okay.
Okay. Why volatile? Why market is volatile? But at the same time, everyone's general knowledge toward a particular company have increased. Why the market, the stock, still so volatile? Okay, the reason is maybe your general knowledge is worthless. Yeah. So
Oh.
for example, now uh you can think in a labor market. In the past, everyone only have sorry everyone don't have enough money to go to college, okay, and they don't receive the tertiary education. So only few people hold the degree.
Yeah.
Yeah, hold a degree certificate. So that means these people can find a good job. They can find a high salary job. But nowadays, everyone have a degree cert. Yeah.
Yep.
So that means uh, you you didn't gain any competitive advantage over it.
This is the competitive parity, which people are standing at the same competitiveness.
Yeah. So nowadays, everyone have the general knowledge. So maybe the general knowledge, this piece of information already pricing, so already reflects on the stock price.
Yeah.
But what is the real valuation? Yeah, it is hard to understand. Even the top investor, even the experts also can't really understand, yeah, how to value a company properly. This is not because of the market, of the economics, of the politics issue. It's also because like the technology. Yeah, there are many factors. Yeah, for example, now you can value the gold. You have your own gold valuation. But what if suddenly uh, the company the company SpaceX that Elon Musk owns. Yeah. So if the company found there are a lot there are there are planet there are planet which is full of gold. Yeah. And they have way to send the gold from that planet to the earth. Yeah, so it will affect the gold price. So and also maybe you have a new technology, yeah, can turn the soil, yeah, soil to the gold. Yeah. So it will also affect the technology can allow you to do this work at a very cheap price. So that means the gold price will also affect the gold valuation. Yeah.
Maybe the
So
substitute like cryptocurrency
yeah,
will
maybe
also
yeah.
be a factor, right?
So there are too many factors can affect a particular ticker valuation. Yeah, it's apply on gold, it apply on Bitcoin, it apply on cryptocurrency, it apply on any on every ticker, on all ticker. Yeah, Apple stock. So that means there is no real valuation. Yeah,
Yeah.
you can't really get a very accurate valuation. But you have a direction. Of course, you still have the direction. And also second, nowadays every central bank, yeah, every central bank, all the central bank at all countries try to print more money as they can. Yeah,
Yeah.
they open the printer press, and then there are more money flow into this capital market. So that means nowadays people buy the Apple stock is not because Apple app the company have this value. Yeah, have the value. So I mean the company with that value. It's because the company is highly reputed. Yeah, and then they know like Apple won't, is too big to fail, and also this is this is yeah this is improbable to fail because Apple hold a lot of cash stay on their balance sheet, and Apple don't have any debt. So how can this company fail?
Yeah.
And Apple still keep earning a huge positive operating cash flow, or we can say a huge net cash flow. Yeah,
Yeah.
from its business. So Apple won't fail in short term. Yeah, so that they park their money on Apple, so that many people buy in the Apple stock is because they want to store their money. They don't want to keep their money in the fiat currency, in gold, in silver, in cryptocurrency, or in other in real estate. Yeah, they want to park their money in the stock market, and they choose Apple. So that's the reason why Apple rise. There's also one of the reason that why this big tech company their stock price rise so significant in this year, in last year to this year. Yeah, yeah. The valuation, the PE, if you're using the PE valuation is uh is is really you can't understand. Yeah, you can't understand why the PE valuation is so great. Yeah, so maybe it is not because of the company value itself. It may also because of the macroeconomics factor. They want to park their money. They trick this Apple stock, Google stock, as like the gold bar, as like the real estate.
Yeah.
But it is more liquid. It is more liquid than the gold. And the gold market, it is more liquid than the real estate market. So they choose it.
Yeah.
Yeah. So there's all these reasons make one point. Yeah, there's no real valuation.
Yep.
And then okay, now we can introduce one concept which is created by the George Soros. The concept is reflexivity. Yeah, reflexivity. This
Okay.
is 反身性. Yeah, reflexivity. Okay. So uh so this term is come from the reflect. Yeah, reflect.
Okay.
So what the concept trying to say, it try reflexivity is something like the stock price rise is because many people buy in, and then
Yeah.
it attract more capital go into it. because it get more attention. Yeah, it attract more attention, and then more people realize, wow, the stock price rise. So and then there are more people allocate more money into this particular ticker, and then
Yeah.
it leads to the stock price rise again. So until the last mover cannot move the stock price anymore. Mm. And then there are people start to sell. Yeah. So and then when people see the stock price fall, and other
Yeah.
people will also follow. Yeah, other people will also sell when they see the stock price fall. So until the last mover, the last seller, saw saw their ticker, and then it cannot move the price downward downward more. Yeah, it cannot move the price down more. So and then it may also lead to another rise. Yeah, so this is the concept of flexibility. Yeah.
Okay.
So yeah, so yeah, this is really really true for this capital market. And this is something like the philosophy idea, because you can't really quantify it. This is a philosophy idea. So that
Um,
you need to you need to try to understand what's the market reaction, and then you can react to that. So this is also the game theory.
oh.
Mm. What you want to ask just now?
Yeah. For this, just now you call it reflect. What reflect? Uh,
Reflexivity.
reflexivity. Um. Yeah. So this concept is based on the thing that we mentioned just now. Like, it's difficult to get the value, the real value of a stock, and then people react uh based on other based on the movement of the price only. Is it like this?
No. Uh, this is two different concepts. Yeah, and we can't get the real valuation. Is a fact. Yeah, it's a fact. This is nothing do with the reflexivities.
Oh.
Yeah, and then this is the macro view of mine, and also of many investors. Yeah, now the stock market is not only is not only like uh the value that company can generate, and also the liquidity. Mm. And which I means is people park their money into a particular stock and
Yeah.
trade it at a stock value. They don't store their money in fiat currency. They don't store their money in gold. They park their they store their money. They save their money in stock market. Yeah. So
Okay.
this is the fact. Yeah. Yeah. You can't deny it, because this is the truth. Mm.
Hmm.
And then the reflexivities is a concept that created by the George Soros. I think is few decades ago. Yeah, in one of the book. Yeah, the book name is also the reflexivities. We
Oh.
can, if I make a quick check.
Hmm.
Okay, reflexivities. George Soros. Then I okay. This is from one of the book that written by George Soros. Um. Uh. I'm not sure the English name of the book, but the Chinese name of the book is 金融炼金术.
Oh.
Mm. Yeah, and then this is the idea that the reflexivities is the idea that George Soros write in this book. Yeah, and this book This book is wait a minute. Okay, let me check. Okay, this book is originally published in 1987.
Wow.
Wow, yeah, it's a few decades ago.
Yeah.
Yeah, so that uh, yeah, until now, this concept still hold true. Yeah, and also uh it's it's more how to say it is more uh visible. Yeah, it's more visible, and it can be seen anyway nowadays.
Oh.
Yeah, because of the information booming. Yeah, everyone can see the same piece of information. Mm. And they also may believe the narrative. For example, if let's say if uh yeah if tomorrow morning you wake up and you read one news, yeah, Apple have the company. Oh, sorry, I mean let's say like the Xiaomi. Let's say Xiaomi. Xiaomi already introduced one self-autonomous car.
Mm.
Yeah. So Xiaomi start to sell the car already. Yeah. Yeah. Just few days ago, just after a few days ago, uh they announced they want to they want to join in this EV. Yeah. But
Yeah.
now Xiaomi already built one car and available for sale. People can make order already. Yeah. So this information, everyone and then you see the price goes up. And then everyone see the initially everyone look at the price, they don't know why Xiaomi stock price rise, but
Mm.
they see the information, they think, oh yeah, this is the reason, so now I need to buy it.
Mm.
Mm. Yeah. So that okay all this all the above I have mentioned is actually want to link to the concept reflexivities. So this means we copy trading is a trend. Yeah. And uh and it is not just the function that we can activate on the platform.
Mm.
Yeah. And now everyone actually copy. Yeah, we actually copy many people homework. Yeah. And we share the homework, we share the answer. mm,
Yeah.
yeah. And then so the market is so volatile. mm. and then there's no real valuation, but you still can have the bottom line. Yeah. And then you also can have your ceiling. Yeah, that is your opinion. For example, you think like for example for Bitcoin or for the whole cryptocurrency industry, you think, yeah, if if other people say Bitcoin is the ego, yeah, it's the digital gold.
Yeah.
So it will replace gold. So at most it will own the value of Bitcoin will only sorry, I mean the market cap of Bitcoin will only reach to the gold market cap. So it's
Mm.
around like 10 trillion. Yeah, so this is the top. Yeah. And maybe you say Bitcoin didn't back by government. Yeah. And then this is something that they can create. Yeah. So that it don't have any intrinsic value. So you think Bitcoin would zero. Yeah. So this is your bottom line. Yeah. And then every people have their own thoughts. Mm. So but what I'm trying to say that you can have your bottom line, you can have your ceiling, even though you cannot get the real accurate valuation.
Mm.
You have the big direction. You just can't know what route you you what route you want to choose.
Mm.
Mm. Yeah. So so how do we adjust? Yeah. So how do we adjust our investment strategy for it? Yeah. So just now all this is the effect. That's the effect. The market become volatile,
Yeah.
and also it's because we don't have the real valuation, and then it will, and also the problem and it may not be a problem, okay, and I mean this effect will keep continuous as long as the central bank keep printing more money,
Yeah.
because they will have more capital, don't have place to go, so they'll flow into capital markets.
Yeah.
And then because now let's say now everyone park their money in Apple stock. So if let's say Apple have some bad news, so people will move their funds from Apple to Google. Yeah. So they know the people no longer want to store their money in Apple. You get what I mean? This is something
Yes.
like you save your money in, let's say, like Bank A. Yeah. Let's say like CIMB Bank. Yeah, you save your money in CIMB Bank accounts. Yeah, they have 10,000. So now you decided to move the money from CIMB Bank to another bank account in public bank. Yeah. So now the 10K move from CIMB Bank to public bank.
Yeah.
Yeah. So this is the movement of the capital.
Yeah.
Yeah. So that's yeah. So this is the effect. And how do we adjust our investment strategy for it? This is a really tough question. Yeah. And for but one thing I can share that nowadays timing the market is more difficult than in the past. And there are more and more people realize it, and they choose, and now and because of this, more and more people realize this, and they choose, and then it lead to more people. It lead to a consequence, which is there are more and more people try to time in the market, not timing the market. Yeah. Yeah. So if you are a long term in, and also it make a strategy so popular nowadays, which is the the dollar cost averaging. Yeah, the DCA. So in the past, because you you still have the chance, to earn money by timing the market, but now the chance is less and lesser. Yeah, because the top investment company, the top investment bank already done this. Yeah, they get the latest information. Yeah, and they have some insider information.
Yeah.
So that they can react faster than you. and there are so many capital. Yeah, there are so many capital. There are so many free money in the world. So they are to react to one information. They maybe for the investment bank, they also can't allocate all the available money to create that piece of information. Because the money is too huge. The liquidity is not enough for them to allocate the money in a short time. So that means there are no more opportunity left for you. If let's say for example, because the liquidity pool, let's say the liquidity pool got 1 billion and the investment bank only got 1 million. So they react to that information, it lead to the stock price rise, and then they have left 1 billion minus 1 million. So they are still have so much liquidity, and then you still can you still can step in. Still can step in. But what if the liquidity pool only got 1 billion and the investment bank got 2 billion? And they can only move 1 billion into the market. And then after they move into the market, and then nobody want to sell the stock to you already. And then the price will be at higher price, and maybe the information already priced in. So there is no opportunity left to you. And it makes sense. This logic can apply on the latest information, and also can apply to a general understanding to a particular stock. So that means this is convinced, or is justified the one of the thing I mentioned just now. Nowadays there are very, very less companies which are undervalued. So this is my sharing for today. Do you have anything want to add in?
No.
Is it confusing?
Yeah, it is confusing.
You want to try to make a summary?
Okay, I try it. Yeah, the information today is available to everybody, and then many of the time people buy a stock, they just based on this information, and then so this is the information sometimes comes from some traders. So this is also a kind of copy trading. And then and then and many people they park their capital or their funds into some good stocks, and then
no, the logic here didn't link together. When more and more people copy other people trading, and they'll buy in the stock, and the stock price will rise. And then the what is the ceiling for the stock price can reach? There's no ceiling. And but because people will compare, so if the price is too high, they may not continue to buy. So this is one of the reasons that the stock price start to fall. Okay, and also, what support the price rise? Yeah, what support the price rise, the stock price rise? There are two. This one is the company, the value of the company itself, and the second is many people park their money in a particular stock. Yeah. So now link to the next point you want to summarize.
Okay. Okay, for the next point, is it about the central bank
Yeah, this is
printing
a
money?
this is a causation. Yeah, this is a root cause.
Yeah, and then the money will flow into stock market.
And then it make the valuation even more difficult to get a I mean it 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 makes the valuation more difficult to predict, more difficult to calculate.
Yeah, mostly is overvalue, right? Because capital
Yeah.
flow in.
Yeah, but the overvalue, the quote unquote overvalue, yeah, is because there are more money. Yeah. So is it really because the company didn't root the value? Maybe not. Because for example, now we only have one now we only have 100 apple, but we have 1,000 allocate to 100 apple. So each apple would $10. But now the quantity of apple didn't rise, but the quantity of money rise. Yeah, the people become richer. So now is 1,000 increase from 1,000 to 10,000. So now each apple would 100. Is it?
Yeah.
Yeah. So, but can you say that the apple now is overvalued? The apple is still the apple. But because of the money is no longer the previous version of money. Yeah. It's not the same. The value of money nowadays is not the it's not the money which sorry, I mean the value of money nowadays is different. It's different from the value of money in the past. So can you say it's its own value? It may not. Just like one of the video we have comment on, which is the Ray Dalio. Yeah, the Ray Dalio comment on the macroeconomics. They also say that don't own cash, don't own bond. Yeah, it's trust. Yeah, and then because of the liquidity, because of central bank keep printing the money, so that you can't really say the stock market is overvalued. We need a new framework to evaluate the market, to evaluate the stock market, the stock price. So that means all of this, okay, to continue your summary, all of this is actually linked to one concept. Yeah, all of this linked to one concept, which is the reflexivity. Yeah. And what support the price goes up? Because more and more people buy. And also more and more people park their money in the stock market. Yeah. So it pushed the price forward. And then when at the last, when no one want to park their money in this stock market and no one want to buy in, and then they want to switch their money from the stock market to other market, for example, gold market, or maybe like the real estate, or even the cryptocurrency, and then the stock market valuation will go will normalize. This means the stock price will drop. Yeah. Yeah. So this is the reflexivities. And then at the end, what can we do? Yeah, what can we do? And for me, this is my personal personal opinion. Yeah, is try not to timing the market, time in the market.
Yeah. Yep.
Yeah, because normal people can't really understand how to value a particular stock, but we but we can know a big direction. For example, we know, like, for example, you say 3D printing is a trend, is a future, and VR is a future, gaming is a future. So you buy Tencent, you buy like the 3D printing companies, and also things like AI. AI is also the future. So you buy Google stock, or maybe and also you believe like self-autonomous car is also a future. So you buy, like, let's say you buy Tesla or you buy Xiaomi. Yeah. So
solar energy.
yeah, and also like solar energy. So this is the big picture. This is the direction. Yeah, and just time in the market, don't timing the market. Because you don't know when the valuation will be realized, will be monetized. For example, like Tesla, why Tesla stock price rise 20 times in these 2 years? Yeah, and the fundamental of Tesla didn't change. Just because somebody suddenly, many people realize, Tesla should not. We have different approaches to evaluate Tesla, and this is a more appropriate valuation method. Yeah, rather than our old method that to value a traditional car manufacturer. And Tesla is not it's not trying to beat the traditional car manufacturer. It's trying to do the thing more than that. Yeah, so that they change the valuation method. And then the stock, and many people suddenly realize this at the same moment. Yeah, and it may also because of the reflexivity. When people see the Tesla stock price increase, and then they try to figure out why, and then they try to search some information. This information already available in the past, but just because people don't believe, people don't trust. Yeah, and but people will trust after they see the price goes up.
Yeah.
Okay, so that's all. Do you have anything want to add in?
No. Yeah.
Okay. So that's all for our today conversation. How do you feel? Did you enjoy the conversations? Please tell us what you think of our conversation. And we are not native speakers. If you found any vocab or grammar mistake that we made, please also comment to let us know, because we want to learn more and improve ourselves. Remember to like and subscribe to us. Thanks for watching. See you tomorrow.
See you tomorrow.